What's up? What's up? It's your boy Corey B. So, look, what I want to talk about right now is the stock market, right? And what I want to get into is just the buzz in the media and what's going on with everybody, and where there's a lot of noise, but not a lot of conversation. And see, I'm all about conversation. I'm all about dialogue. I'm all about people actually communicating and really growing and learning from each other, right? And so that's where I'm at, right? Um, Yesterday I was having a conversation with one of my partners, great homeboy of mine, and we were I'm in a group, right? We have an investment an open chat between a couple of us friends who are all investors, right? And we all do in different types of investing. A couple of guys are real heavy into crypto. A couple of guys, one guy is an incredible swing trader, and his expertise is in risk management. Um, Two guys have been working. They worked for Merrill Lynch for years. Another guy worked for Charles Schwab. One guy is actually he's got an expertise in digital. He's got a background in digital, like coding and things like that. But he's really smart. He's an avid investor. Um, but anyways, I have a particular background in the stock market. Um, and another guy is an incredibly strong momentum trader, which I'm actually been honing my skills at doing swing trading, but more of a momentum trader style. Um, so, anyways, the point is I'm in a group, and we all have different backgrounds. We all have different levels of expertise and different skill sets. And what we do is we share information anytime, because we're all subscribed to different things, like that are our background, that are our uh, knowledge, like appreciation, the things that we're interested in, right? We all follow certain different platforms that we get content from, that we get information from, that we get news articles and things like that. And none of us really subscribe or follow exactly the same thing. Now, sometimes there's a little overlap, like, you know, two of us may subscribe to this and two of us may subscribe to that, but ultimately we all get information from different places, and we all share information with each other. So when we're watching the market, whether it be what's happening with crypto, or what's happening in the stock market, or what's happening in Washington, that's affecting crypto, or what's happening in other countries that's affecting Forex, or that's affecting different currencies, or crypto, or stock market, or anything, we share that information with each other, because we're like, hey, look, have you seen this? Did you know that? Did you know this? And we also share personal stories. We tell each other about the things that we experience. We're like, hey man, I was doing this and this happened, or I had a buddy, I had a neighbor, I had a whatever. Well, the conversation yesterday opened up because I was sharing with one of the guys about a neighbor of mine that I didn't 100% agree um, with her approach regarding her retirement. And I wasn't knocking, I wasn't insulting. I felt like she could do better. I felt she could do better. Um, Now, my buddy, he had a interesting perspective, because, okay, so let me lay it out. My friend, what she had done is she had found out she had a good portion of her retirement was and she's in her mid 60s, right? And a good portion of her retirement was in the stock market, in different investments and things like that. I don't know how much of a percentage was actually in the stock market, but she had like 20% in like 401k, and the other 80% was spread out over different investments that ultimately, most of which she didn't even choose, most of which were kind of selected for her via a retirement planner, right? And so, but because it's her money, it's her retirement, absolutely, she can get in there at any time and change things. She can, move money around and make adjustments as she sees fit, because it is her money. She just had a retirement planner basically set it all up initially, because they have more of a background and understanding what they could do over, I don't know, probably the last 30 years that she's been putting into this account, right? Well, after she saw a huge drop she saw a good chunk that she lost. She lost a good chunk of money in a matter of like 2 weeks. And as she lost that good chunk of money, and this was last March-ish, about a year ago, and she had lost a chunk. And I don't know how we got on this conversation, but we were just talking. I was just telling, I was like, yeah, I saw this happen last year, blah, blah, blah. And I felt like she could do better. I felt like she instantly wanted to sell off things. That was her initial response. And she was like, I have a friend who's also had retired. They were coworkers and they retired from the same place. And then she was like, well, after they retired, they were managing their own retirement portfolio. And she was like, so I think she knows what she's doing. And so since I'm losing money, I'm going to trust her to help me sell off some things and figure out where to reinvest. And my first initial response and thought was, you know, you got to do what you got to do. You got to do what you feel is best for you. And, you know, obviously protect your livelihood, protect your future and your retirement plan. But I think, you know, you lose a chunk. My first thing is to evaluate what it is, where it is you're actually invested in. See if those are going to be viable in the long term, and how long term do you really like? To me, I was like, there's a lot of variables that you need to figure out, you know. And her, you know, she was like, oh well, I've already done it. It's done. And I was like, okay, well, you know. She accepted that it wasn't her wheelhouse. It wasn't the things that she was knowledgeable about. And she just wanted to protect her money. And I can't fault her. I just wish that more people knew more, that more people were in a better spot, that they knew more about it and they were able to protect their assets better. And so my buddy's approach was, he was like, well, she probably did the right thing. And I was like, I'm not saying she did the wrong thing. I'm just saying that I feel like she could have done better. Because over the last year, there was a time in March and April that my portfolio, which my portfolio is, I'm pretty diversified, but I'm not, like I talked in my last post about diversification and stuff, that they'll give you tips and things that, oh yeah, you should be spread out more. And it's all about, you know, it's not that simple. Go back and watch my last video and let me break it down for you. But with that being said, I'm diversified enough. I'm happy and content with where I'm at. And I've got my hands in many different baskets. And during the pandemic and everything, while the stock market was all kinds of people reporting lows. And I don't think, now my homeboy, he tells me that I'm the exception. I'm not the rule. And he's, you know, and this is not me tooting my own horn or anything. This is because I disagree with him about this. He believes I don't give myself enough credit for my skill level, and that most people aren't as knowledgeable about this as I am. And I think it's that, not that people, it's not that I'm so smart, and it's not that I'm brilliant or whatever. I believe that it's a skill set that anybody can learn. I think most people don't want to learn. That's just my approach. And like I said, that's me being humble, truly. So I hope y'all can take this from the proper perspective. I think I am skilled. I am skilled and I am well-versed in the stock market, and I understand how it works. But I also think that I have made money while the stock market is going down because I've done a lot of reading. I've done a lot of learning and understanding. And I see the things that are happening that are going to trigger more growth and more money on the back end, right? So I may take little dips here and there, and it's like, oh, well, you were at 24, now you're at 20. You were at 16, now you're at 12 again. You were at 12, and now you're at 8. I saw that happening last March and last April, and then in June, but then I saw it going back up again, while all kinds of other people were going, and that's because ultimately, yes, there were different companies that their stock shares were taking hits, but not every single company was taking a hit. And now you look at the S&P overall, yeah, the S&P was down, and then it was back up, but not up high enough, and now it's back down again. And it's like, but just a couple of weeks ago, it was up again. And now, right now, it's dipping again. It's down, and it's projected to hit hard. And there's a lot of experts. And see, this is what I'm talking about it right now. I'm talking about it right now because there's a lot going on. I'm not just bringing this up just because I had a conversation yesterday. Yesterday just kind of triggered some thoughts in my mind. And then I've seen so many different news articles pop up in the headlines lately. And it's like everybody's trying to predict this inevitable crash, right? And I'm not saying that there's not a crash coming. I'm saying that it doesn't matter. Now, the problem is it's about perspective, and it's about diversification, and it's about, is this what you're living off of? So I'm still collecting dividends. I've been collecting dividends. Now, my dividends aren't anywhere on millions of dollars. My dividends aren't on levels that I can't live off my dividends right now because I don't got millions of dollars in the stock market. But while everybody else has been talking, well, not everybody else, there's plenty of people who are doing great in the market. But while the media continues to say, oh, well, it's crashing, it's all over, it's done, it's done. It's a done deal. That's what everybody keeps saying. Everybody wants to talk about that it's a done deal, right? And I'm not saying that it's not a done deal. I'm not saying that the wheels haven't already been set in motion for the stock market to take a huge blow, a huge hit, and even potential crash. I'm saying it's crashed before. It's crashed before. It's had dips before. It's had taken hits before, which, there's a dip, there's a hit, and there's a crash. But every time it's always recovered from all of these. Why? Why? Because ultimately the market is based on companies that do exist and they will continue to grow and thrive. And at some point, it's the everyday consumer that freaks out. It's the everyday consumer that freaks out and sells off their stocks. And while they're selling off their shares, that's what tanks the market. The company's still there. The company's doing fine. The company's not even affected by the stock market. The company doesn't care about the market. The company only cares about the market because they've got stockholders, shareholders, and investors that they've got to answer to. So when it takes a dip, then they've got to explain to their shareholders and their stockholders and their board members, it's like, hey, are we still okay? But if they can viably, logistically explain that they're still okay, the board don't care. The board don't care. Now, some people, the board cares. Some companies, the board cares. Some people will be in a bad way, and that has a transition in a company, which could be good, could be bad. Sometimes it's not really good or bad. It's just unfortunate for the person that got moved out or demoted, something like that. So these things happen. They do. They do happen. And it's unfortunate when companies do that because a CEO or an executive shouldn't be moved based on the stock market because the stock market is affected directly by the consumer, not by the company itself. But sometimes they just gotta, it's business. It's business, and business sometimes is perception. So they have to make a good show. They have to look good to all the shareholders and stockholders because of all the people who still invested in the company, who still hold shares in the company, and they have a stake in this company, and they want to be able to tell those shareholders, hey, y'all are invested in us. I know that you were sitting on X amount of dollars, and now you just lost 20% because we lost, don't bail because we got rid of that executive and that's going to change everything. It's not going to change anything. Because the stock market is not affected by that CEO. The stock market is not affected by that executive. The stock market is, however, affected by the consumer. Now, there's a gray area because how is the stock market affected by the consumer? Well, the consumer either buys or sells. So is the replacement of that CEO or executive going to affect the consumer? Yes. Why? Because people don't research and they're gullible. It's true. That's what it comes down to. And so I beg and plead of y'all to research, know what's going on. Don't buy into the hype and the nonsense of this CEO or this executive. If I fire them, it's going to change everything. It's going to change some things, maybe. But if the overall company is still the company, then what that did, Just got that man fired for nothing. And then y'all buy more into the company and ultimately get more money coming in. And then they think, well, we've done our job. We've fixed it. We've given y'all some pacification that's allowed y'all to believe in our company again. So y'all have reinvested and bought more into the stock market. And now our shares are up again. Obviously, firing old Billy over there was the right call. Firing old Billy over there didn't do anything. Was Billy doing something wrong? Was Billy really causing problems in the company? No. I mean, maybe. I don't know. But at the end of the day, when you're doing it to appease shareholders, you're doing it for the wrong reasons. And if you as a shareholder, as a potential investor, see that as incentive to buy in, man, you're missing it too. So what's going on in the stock market right now is, or in the media necessarily, is they're telling everybody there's this crash coming. So what's going to happen? What is the domino effect of telling everyone a crash is coming? Anyone in the back? Okay. So the inevitable fallout of telling everyone that a crash is coming is going to entice, just like my friend last year, it's going to give them encouragement and incentive to sell now before it's too late. So that's what they do. They reach deep into their pockets. They sell. And they sell. And then you got homeboy over here who's not even paying attention to the media. He doesn't even know what's going on because he only invested because his buddy told him to invest, or he invested because it was part of a program at his job, so he doesn't really know anything about it. He was just, but every Tuesday, he's like, oh, I wonder what it's like because I got a little break between meetings on Tuesdays. So Tuesdays when I check what the market says. Yeah, it might be you. A lot of people do that, okay? A lot of people do that. They don't know anything about it, but it was just an incentive program, or it was a friend suggested it, so they got in. And then every Tuesday they check their account, and they're like, and then one Tuesday after all this media comes out and all these people start selling, then Craig and Tommy gonna look in their accounts on Tuesday, and they're gonna see, I'm down 5%. 5%'s a lot. 5%'s a lot. It is. It truly is. But can a market bounce back from 5%? Absolutely. But they don't know anything about the market. So do they care about that? No, they care about the fact that they lost 5%. And that 5% for Craig could be, 30,000. I mean, it could be 5% of 30,000. For Tommy, it could be 5% of 10,000. Or it could be 5% of 2,000. That's still his money, his hard-earned money that he put into a program because it was an incentive at work. Or because his buddy told him, because Craig told him, hey, it's a good idea, I'm buying in. And he's like, well, I'm not really, I'm only gonna put 2 in. That's cool. I'm putting, 5% of my paycheck. I'm putting 5% of, so it's like when you lose 5% of your 30,000 that you got invested, or you lose 5% of your 2,000 you got invested, but you don't know anything about the market. You get nervous, you get scared. So you just call up your broker, you call up your agent, you call up, and you're just like, dude, just sell. Just sell, just give me my money, just sell. I just want my money back. I want it out while I'm ahead. I don't want to lose anymore. I just, I've already lost, I've already lost $100. $100 is enough to lose. I'm done. He's over there. He's like, man, I've lost even, more. I've lost, and he's like, I'm out, right? When more of these people go out, that continues to tank that stock. And as those stocks continue to tank, it makes the market look even worse than it really is. Because people are going out for the wrong reasons. There's an old saying. There's an old saying, right? And there's a lot of people who will look at, the Buffett, Rockefellers, big time investors. You know, they'll look at O'Leary, look at some of the people on Shark Tank, you know, and they'll see these people capitalize on people's moments of weakness, right? It's business. It's just business. And they'll see people who come out of a recession with deep pockets. And so when they come out of a recession with deep pockets, people frown upon them. Well, you obviously must have gotten it like, you know, off the broken backs of the hard workers. Some people get rich off of the broken backs of the hard workers. Absolutely. I'm not saying it's not true. But the way you make money in a recession, you buy low. There's this saying, millionaires are spawned out of recessions. There's no statement more true. The wealthiest of people, made money off of opportunity. Now, there's plenty of people who are skeptics and they won't believe that. They'll believe that, oh, they inherited their wealth or they got it by, you know, slave labor or, you know, taking advantage of the weak. No, it's opportunity. Opportunity. And you don't have to be wealthy to do it. There's so many great investors. There's so many people with extremely deep pockets. And they made an enormous amount of wealth off of opportunity. Buffett himself has said it several times. He loves to see the stock market go down because that just means he gets to buy more on sale. He's not interested in changing his position. He knows what companies he's invested in. Now, through research and time and stuff, he has cut ties with companies over time. He said, you know what, it's time to let go of this company. But that's not even that often. But he lets go of a company because it's time to reinvest into a new company. And he feels like that company has peaked. Or that company has ran its course. Or maybe he just needs that liquidity. And he's like, I'll sacrifice this one because it is what it is. Buffett loves companies that have dividends. Not every company pays dividends. I love companies that pay dividends. It's great. Every quarter, just get a little email, little bonus. Hey, dividends just hit your account. Oh, yeah. And I don't care how much it is because it was free money. Because that has nothing, the dividends have nothing to do, we'll talk about dividends another day. Has nothing to do with the stock going up or down. That's the cool thing about it. Dividends have nothing to do with that. Dividends are really cool. You're getting dividends just by being invested in the company. I encourage you to research. I encourage you, please, stay tuned to my channel. I'm going to keep discussing things. I want y'all to learn more. I want us to grow more, but I want y'all to read. I want you to break out, not headlines, not mainstream media, not even little blogs. Like really research some of the companies. Get on look at the S&P, okay? Look at the S&P, see the companies that are dropping. They're taking hits right now. Then research why. Research why. What's going on with this company? What's going on with that? What's going on with Apple? What's going on with Coke? What's going on with McDonald's? Love McDonald's. And this is not an endorsement for you to go invest in McDonald's, but I love McDonald's. McDonald's is great as a company, as a stock. And I love a good burger and fries. It's like one of my indulgences. I can definitely throw down a Big Mac, fries, delicious Coke, and nobody has a Coke like McDonald's does. If you don't know about that, look that up. They literally have a different Coke than everybody else. It has to do with their straw. It has to do with the syrup, CO2 distribution. Everything is slightly different with McDonald's. It makes their Coke awesome. And if you think that's a wise tale, it's not. Look it up. Legitimately, look it up. Anyways, so go check out what's going on with some of these companies. If you're not invested, that's cool. Go check out some of these companies and think about investing. Then, if you are invested, before you start selling, look at some of your bigger companies. Some of the companies that you've got the most leveraged with. You've got a lot of money in this company, that company, whatever the company you got the most in, look at that company. Man, I've got 15% in this company right here. Okay, what is that company? What are they doing? Are they going to take a hit right now? Are they tanking right now? Are they slipping? Or are they on the rise? If you see companies in your portfolio that are dropping right now, or that are down right now, if they're already down, great. They're already down. Great. I say that, great. Look into the company. They got a future? Are they going to go back up? Is the company viable? Buy more. One of my phrases, blue light special, man. Old school Kmart, baby. You got blue light special. Get you some stocks. Buy you some more. It's already dipped. It's already dropped. You've got $1,000 in there. It's already down to 8,000. Don't get scared. Don't freak out. Don't run. Don't duck and hide and cash in all your money and say, I'm just going to take a $200 loss. No. Ooh, no. Get back out there, baby. Buy some more. Cost average some of that out. You get some more. That's a whole nother conversation, but you get some more at a cheaper price. Suddenly your percentages are skewed a little more. You're cost averaging your stocks. Man, I say all of this to say there's things happening. There's things that have been happening for the last 4 years. There's other things that have been in motion for the last year. And there's new things that have been in motion for the last couple of months. And second quarter, they're about to hit. They're about to hit. And things are going to jump off. And things are going to look a little shaky because a lot of people are going to start selling and they're going to tank stocks and they're going to tank the market in a manner in which that it shouldn't have tanked in the first place. But it's all because of hype. So allow that hype to build your future wealth. Buy in while you can. Don't be a bear. Be a bull in a bear market. That's how you become a millionaire. That's it. That's the secret right there. You be a bull while everybody's being a chicken bear. Everybody's selling. Everybody's running scared. Get in there and buy. And then you're going to be the one who's sitting back and everybody's going to be like, well, it's not fair. How'd you get it? Nah. You were smart. It's not about fairness. It's about smart. Grabbing that opportunity. Now's your opportunity, and you're about to have another one. Like in the next month, you're going to have another big opportunity. And then in the following 2 months after that, you're going to have another opportunity. Keep your eyes open. Keep your eye on the prize and get your money. Anything you can do right now to be smart and wise about making some more investments while the opportunity is hot. Don't miss this chance. You won't see another one for a while. Now, I'm always very optimistic that there's always more opportunities. But regarding the stock market, this is going to be the hottest opportunity you're going to see in a long time. I'm already putting more in. I'm planning to leverage more in the next month. And then the next 2 to 4 months, I plan to leverage even more. And within the next 6 months, I'm going to position myself. I want you to do the same. Do the best you can. And I'm not saying put your family in a bad shape. I'm not saying spend money you don't have. I'm saying be smart, be wise, think, don't sell. It's your boy. Y'all stay tuned. Give me some love. Hit that like button. Hit that subscribe button, ding your bell, get your notifications. Y'all stay tuned. I got some more coming at y'all. We're gonna keep things popping and fresh, and we're gonna keep growing and learning from each other. Y'all leave comments below. Feel free to reach out. You know, y'all know how to find me. TikTok, Twitter, Instagram, Facebook. Y'all know where to find me. Y'all stay tuned. It's your boy. I'm out.